Hi friends, Rocky Outcrop here. Let's take a look at Ethereum technical analysis together. Okay, so we're going to take a look at Ethereum versus the USD, take a look at Ethereum versus BTC, although there's very few people who actually want that, really, although you have said to me that you want it, so let's just keep doing that then for now. What have we got on the go? Just, yeah, it's okay, there's hidden bullish divergence here on this point here in this upward trend, so that's positive for the price action. What's negative for the price action is that we're potentially in a downward trend overall here, so we really need to see, at the prices move back above 420, or else really what you're looking at is the potential for us to come in and put in at a low. Now, if the low comes in lower than our previous low, given that this is the dynamic that we're looking at here on this thing, but the hidden bullish divergence, would that be hidden bullish divergence? Well, only if we don't go below 390. 391, 390, whatever you want to call it. If we jump over to this chart here and zoom all the way over to the left, you can see that the 390 area is very significant. Let me put up the 24-hour time frame so it doesn't take all day, because that's where your 236 Fibonacci retracement is over there on that one for towards the upside. If you want to be positive, now we captured that, we're above it currently, so losing that would be very negative for the prices, and of course it would negate that hidden bullish divergence, looking at instead just being in a downward trend. We've also got this upward sloping trend line here, which formed previously part of a descending triangle, symmetrical triangle on the price action. We've got this little bit of a sort of pattern on the go here. You could say if maybe it's being a bear flag or a bull flag, sorry, but also it's kind of crap, really, in terms of its structure. So looking at this thing, and I've got a couple of questions about it. It's been decent, for us in terms of shorting it down from the 450s down towards the 390s. Again, in terms of a decent, really solid move there of over 10%. We come back up then towards the 420 area. 420 is quite crucial. If we retake that, then we can see potential moves back up towards these areas, especially over the weekend, where it kind of doesn't really matter too much what happens. And staying above 400 is kind of like as a rough number for a psychological impact. It's probably quite important too. But I would look down towards the 390 area instead of that 400 area. Although of course I think people will be talking about 400 as if it's more important than 390, when 390 really is the more important number. Then what else we have here on the go, as well as if this becomes just as a rising wedge on the go, which is obviously a more bearish pattern, we could be asking questions right now about whether or not we're breaking out of it. Of course, this could just turn into a wick and we could just find ourselves back within it, or of course this could be drawn in ever so slightly erroneously, which is totally fine. I'm always happy to admit the subjective nature of these things, in which case we're still positioned perfectly within it, and we could be looking for a move outside of this thing. So I borrow that little measuring stick that I've used in the past and bring it over here and stick it onto the price action. You can see that brings us right in smack bang on top of this number here at 308, which is of course the 382 Fibonacci retracement zone. If we were to do that, now if we were to do this over the period of the next wee while as well, what we could be looking to would be various other little things, like will we find support in it around about where we have this little juncture here where there is the previous descending triangle. And that would make sense, because if we were to be breaking out of this descending triangle that we have in the background here, I'll just denote it by this line here, which I'll make bright yellow so you can see the lower end of it, and this one I'll make bright yellow as well. If we break out of this one towards the lower side here, then the measured move off the back of that would take you down towards the this zone here of trying that. Now that does actually bring you down below this 236 that we gained on the way up, but we'd still be above the 236 in terms of the smaller term time frame Fibonacci retracement, looking at the lows down here in March up towards our most recent highs there. So from Friday the 13th up towards the highs here and the 16th of or 15th of August, then that's where your 236 comes in at. So that'll be kind of fair enough, and that's where the median line of the pitchfork is that we're working with on this thing. So that's quite cool. If that were to happen, it would be okay, maybe offering up a decent buying opportunity, but I would be quite cautious about it. Like I say, negating that hidden bullish divergence and potentially looking down towards these other targets with a potential breakout of the overall rising wedge pattern here on the Ethereum chart. So I'd have to say that the targets towards the downside have got to be 390 something. You choose. I'm not going to spell it out for you exactly. 340 for instance, and then thereafter 292. And I think any movements beyond that are beyond the scope of really trading this thing, and what we do on the channel is trade. So I'm not going to bother to go on about anything too big about that, because we're not looking at sort of telling people to invest in a short, or we're not really talking about investing so much as we are talking about trading. Now, if we did move it towards the top side, then of course you've got this $500 area where the pitchfork comes up to at the top side as being kind of key. Of course, there's also this horizontal line that we have drawn in the past, which is very wavy. I really did. I was kind of just making a joke when I put that on in such a wavy way, but it is real, kind of coming in at about there. So that would be where you'd be looking at for the top side resistance at the minute, and of course that chimes fairly nicely with the whole Bulkowski pattern, 60% style of the measured move rather than going the full way. So if you were to do that, that's where you'd be looking to. But a full measured move off the back of that, just let me check if not fluffed this up too much. Yeah, cool. Okay, you could be looking up towards the 560 area. So that would be like, beyond that, it's very, very much greedy and out with the scope of trade in it as well. And you'd be looking up, I suppose, if you needed to go beyond it, the 382 over there at 592. Of course, in big terms, because everybody loves a meme style looking at this thing in terms of investing towards the upside. Then you've got 751 and 955 towards there as being your upper side targets, but that's getting carried away with things. But at the minute, don't need to do that. It's out with the scope of trading this as a sort of actual trader. So that's your targets for this thing. How long's this video lasted as well? This one's lasted for just about 8 minutes as well. That's kind of cool. So we're not going on and on, banging on and on. So that's handy. Chimes fairly nicely with me, and we've still got to finish off by going on to the Bitcoin pairing on this one. Otherwise, I've already said chiro. Looking at this, you can see that we've been bound within this parallel channel so spectacularly nicely over the last wee while. Now, could it again, like we spoke about with the rising wedge, be positioned ever so slightly wrongly? Well, it could be. If I just captured this little bit of price action at the bottom, then that actually also just captures the body of where we are just now. So we could still be within it, and therefore you could be looking towards your next sort of upward side targets as being both 3745, 0.03745, and then towards the top side thereafter would be taking you up towards perhaps our fuzzy line in here at 3985, 0.04. Or if we go down towards the downside, I'd be really looking at where this 21 EMA is coming out on the daily time frame and saying that this zone here is crucial for us. If we drop down below that, then as you can see, when you're down below the 21 EMA, it's quite bearish. When you're above it, it's quite bullish. Now, of course, this has overall been a bullish trend. So while we were down below it here, we didn't spend forever down below, came up above, and ultimately moved towards the top side thereafter. So you can see how those bullish trends can also operate for you in terms of like having a bit of a chunk of a pullback. If we did drop down below the 21, then where could we look to thereafter? I would say 0.03, where you have the 55 EMA, the 50 simple, and of course this here, which is a 382 Fibonacci retracement point. If we needed to push beyond that, then the two targets have got to be 0.02735 and 0.025, where that golden pocket retrace zone is, coming in here around about the 233 exponential moving average and the 200 simple moving average in around those zones over there. Is this set to 200? Or yeah, it is 200 and 233. Yeah, good stuff. That's correct. The 50 is coming in at right where the 144 is, so that's not a coincidence in my mind. That all ties together, and that price, of course, is that 0.02735 that we spoke about. So looking at that, that's got to be what you're talking about. I've done the upside targets, the downside targets. There's various things on the go here in terms of the RSI and whatnot. We have this triangle down here. As you can see, we're really asking questions about breaking out of it now, just at the same time as we're asking questions here. So we can keep our eye on the 21 EMA in terms of kind of getting confirmation from that as well. We could look at things like a swing failure on this if we wanted to get confirmation on it as well. I would say the resistance is, and that if we find that this line here operates as resistance for us, this purple line is the bottom end of our triangle, then I would say that's fairly significant. We've got this sort of channel S type wedge thing here, channel on the stochastics, also right here on the neutral line. Movements down below that very, could spell for a negative weekend for people. A lot of people getting rinsed out of the market, getting washed out as they get their long leverage positions liquidated. Of course, all that can be determined fairly easily. Yet again, just to reiterate, if we look at the 21 EMA and indeed this magnolia colored line scrolling over to the left, you can see that's a 236. It comes in there at 0.03284, where we also have a fuzzy grey line offering up that support line for us. So that's it covered for you. I think that's pretty decent overall. You can see certain things happening at the same time. ADX just right on there at 40, potentially coming down below it, 40 being the zone which I could call perhaps the sort of the bullish or bearish control zone, just depending on which way direction the trend is going, but you could call it the trend control zone over here on this thing. And we also have a degree of quite a strong degree of bearish divergence showing up here on the MACD, very, very obviously in this area. And you could then think to yourself, well, why is that happening? And maybe it's to do with some of these things that we're discussing here in this episode. So how long have we gone on for? Not too long, hopefully about 10 minutes. That's good enough. That's going to have to really pretty damn solid episode. If I were you, I'd hit subscribe, because I know that there's a ton of a really good value, really good technical analysis here on the channel, and I would share it with all my friends and tell people, oh my goodness, you must check out this channel. It is absolutely divine. That's what I would be saying. So I would encourage you to do the same, because boys, it's just so damn good. It's just so damn good. Anyway, we've been nailing it with Ethereum technical analysis recently, so I hope that has actually translated to some positive numbers in your account. So that's all good. You can join the Discord if you want to come along and chat with other people who are like-minded and, agree and disagree and agree to disagree about certain things. If we look here at, what am I looking at here? Yeah, if we look here at some things like, what have we got? People all talking to each other, lots of people talking to each other about different targets and things. Chainlink, people talking about different stuff here. Ethereum, this is Ethereum one. So no real chat today actually on Ethereum. So join this here and add to the discussion. There's plenty of good stuff to be talking about in here. We always have good discussions. There's lots of good things to be known, and yeah. So it's really fun. So it's really funny as well. Highly recommend the Discord, but everybody has their own opinions and they're allowed to express them, because I believe in you as an individual trader. Okay, so you have that skill to be a self-reliant, resilient, consistent, profitable trader, and of course that means when you come in here, then you are going to really benefit from kind of solidifying your self-belief, I think, as well, in a crowd of people who are all in it for the same reasons as yourself. So I would say that's good. And of course, I'm not the center of attention in that thing. You all are, so that's excellent. I'll catch you in the next episode. Going on to do Link, Tezos, and I think I'm going to do a bonus coin today of Tron. So check that out if you want to. See ya.